Hello viewers, welcome back to our YouTube channel, CPA Charles Cafe Accounting Tutorials. And today we want to start looking at the cash book. We want to look at the cash book in details and we see what it means, because we saw previously that the cash book is one of the subsidiary books that follows a double entry system. Two, we also saw that a cash book is also part of one of the principal books because of the fact that it follows the double entry system of recording. So I want us to dive in and look at what a cash book is all about. So we are going to look at the introduction to cash book. Introduction to cash book. Introduction to cash book. So that's what we are going to look at for now. So permit me to take off my video so that we can be able to concentrate on the screen as we proceed. So we have the cash book and we want to understand what a cash book is all about. So the cash book, first and foremost, a cash book is a subsidiary book of accounts that is used to record transactions. And also, a cash book is also said to be part of the principal books because it's the only subsidiary book of account that follows the double entry system, meaning there is always a debit side of the cash book and also the credit side of the cash book, just like the way we've done for ledgers. Therefore, a cash book is seen like a ledger, is more of a ledger, or is more of an account because it follows the double entry system. However, a cash book is a subsidiary book because transactions of cash are first recorded in there. They are first recorded in that cash book. So once you refer to my first video about the accounting books, where we talked about the subsidiary books, where we've seen that we have some special journals or some special books. There are also the general journal, and we also said that the cash book is one of the special journals. It's a special journals because it only records cash transactions. So if there is any transaction that is not by cash, then it's not covered under the cash book. So it will not appear in the cash book. So that's what we can talk about. So it's both a subsidiary book and also a principal book that records cash transactions. That's as per the definition, or definition wise, that's what we can say. But now going forward, what we need to emphasize is that we always record cash transactions alone. Cash transactions, anything that doesn't involve in cash movement, then we don't record it in the cash book. So the analysis that we are going to be doing is we are going to be looking at the cash inflows and the cash outflow, what comes in and what goes out of the business, because it's the cash book is all about the cash coming in and the cash moving out. However, I want to repeat that we are going to talk about the main levels of a cash book, which include the following. We have the main, if you look at the cash book alone as the cash book, it has types. We have different levels of cash book. We have the first one, which is the single, let me use a different color. We have the single column cash book. And then we also have a double column cash book. This one is also referred to as the two-column cash book. Then the other, we also have the 3-column cash book, or which is also known as the triple-column cash book. Now, there are other cash books, but these are the main cash books, main one. But we also have other cash book. We also have other cash books. So these 3, they are the main levels of cash book. And there is also a cash book that is called the petty cash book. It's also a cash book which is called a petty cash book. It's called a petty cash book because it is used to record petty cash expenses. It used to record petty cash expenses in the business, and those are the ones that that form the 4 levels of cash books as far as accounting is concerned. But now let's try to be a little bit broad, to broaden them, to see what is all about these different types. Now, for the single column, it's the type of a cash book that has only 1 column for amounts. If you look at that single column, we shall see the single column cash book. The identifying feature is that it has 1 column for amounts. You can either have a cash column or a banker column, but you can't have both. Just one. If transactions are going to be on a cash basis, then you are going to have 1 single column for cash. If the transactions are going to be bank transactions, then you have 1 bank column that is going to record all the banker transactions. So the single column is that type of a cash book that has only 1 column for the amounts. And it means that when we say a cash book is a single column, then it is either going to have a bank column or the cash column, and it can't have both at the same time. But you have to remember that transactions could be made from cash in hand or cash at hand, or the transaction could also be made from cash at bank. So for a single column, it's either of the 2, but you can't have both. So the transactions that are being made from the cash in hand are the ones that we call cash transactions. Then the ones that are being made from cash at bank are the ones that we call bank transactions. Therefore, when we are preparing the cash book, we always do our best to separate cash transactions from the bank transactions. So these are going to be bank cash transactions, then this will represent the bank transactions. So we need to separate these 2. We don't need to mix these transactions whenever we are preparing our cash books. So that's what we refer to as a single column cash book. Now, we have a double column cash book. We have a double column cash book. Double column cash book. A double column cash book. And this double column cash book, the implication is that it's going to be a cash book, is a type of a cash book which has columns for both cash and bank. So it has columns of both cash, it has cash transactions, and then the bank transactions. So we have a column for cash and a column for bank. So those are the ones that we call the double column cash book. Is a cash book which has both columns for cash and bank, meaning that we will be creating 2 columns for the debit side and then 2 columns for the credit side, representing cash and banker columns. So whenever you are preparing a single cash book, then you will be using that cash book for either bank transaction or only or you'll be using it for recording cash transactions alone, but you can't use it for both transactions. And the difference between this cash book is that the column amount, the amounts column is the one that is going to be differing. We may have two columns for amounts on either side of the cash book, on the debit side and the credit side. That will be a double column. When you come to a single column, meaning we shall have only one column on the cash, the one column either for cash or bank, that is going to be handling either cash or bank transactions, and that's going to be that on either side, on each side of the cash book. Then when it comes to the three-column cash book, then we shall have three columns for amounts. So when it comes to the three-column cash book, it's a bit different. Three-column cash book. This one is a little bit different. It has three columns for amounts, three columns for amounts. So we have a column for discounts, then we have a column for cash, then we also have a column for bank, meaning on either side of the cash book we have three columns: the discounts, either discount received and discount allowed on either side. So those are basically the three main cash books that we have. So the differentiating feature is that for the three-column cash book, it has both cash and bank columns for both the debit and the credit sides, but with an additional column for recording cash discounts. Here we record cash discounts. So here we take into consideration the discounts that could be received or discounts that could be allowed. A discount received will be from the suppliers, then a discount allowed will be from our customers. We may give our customers some discounts. Maybe they have paid on time, then we'll find ourselves giving them discounts. So that will be a discount allowed. But a discount received is when you buy goods on credit. Maybe you have paid the supplier on time, then the supplier gives you a discount for the goods that you have paid for on time. So they use these discounts. Most of the times they are used as a way of discouraging discouraging credit purchases or credit sales. Because if you give someone a discount, he's going to rush to make sure that he makes a payment. At the end of the day, he will be enjoying the discounts. So these discounts must be for cash, not trade discounts. Trade discounts are those that are going to be dealing on quantities, that if I buy so many, they are going to give me at a cheaper price. Those ones we only record them in the day books, but we don't record them anywhere. We shall see how we are dealing with the trade discounts when we start doing our day books or the other journals that we spoke about. So the three-column cash book will still have a debit. So the debit side will actually have three columns. We are going to have a column for discounts, column for bank and cash, and that's all. And that makes the difference between the single column, the double column, and the three-column cash book. And now when we go to the pet cash book, it's a little bit different. It's different from the three-column cash book and from the other three cash books that we looked at. Because the other ones, for them, those first three that we spoke about, those ones are the main cash books. But this one is just another cash book, but it's a bit different. Now, I'm going to try and take a practical question so that we can be able to understand this, but we are going to do this in the next video. But for now, let's first understand what these are. so that we can be able to get to an understanding of what we are going to be doing whenever we go to the practical computations. So I'm just going to illustrate the format, then we shall take the practical question in the other coming videos. So let me begin with a single column cash book. So it's just like I said, a single column cash book has a column for either cash or bank column, but not both on each side of the cash book. So it's like an ordinary cash account or bank account, meaning that even though I'm calling it a cash book, but it looks like an ordinary T account, which has both the debit side and the credit side. It can be like this. This can be a cash book. It has some currency signs there. Then of course this is the debit side. Then this is the credit. But what I want you to understand is that the debit side of the cash book is for cash inflows. Then this is for cash outflows. Or this is the payment side. Then this is the receipt side. Therefore, when cash is coming in, if cash is coming in the business, we debit, meaning we put it this side if cash is coming in. If cash is moving out, then we put it this side. But for now, I want us to focus on the double column cash book, because for a single column cash book, it is a bit hard for it to be examined. So what we are going to do, we are going to focus on the double column cash book for now, and after that we shall look at the practical question and we try to solve the double column cash book. We see what we can, so that we can be able to understand the double column cash book or the two column cash book, and from there we shall move to the three column cash book and then the petty cash book. So let's meet in the next video as we are looking at the double column cash book. We look at its format and all that. We'll take also a practical question.